What's going on, guys? This is Daniel Myra from Cryptodemia, the Academia for Cryptos, and in this video I'm going to show you how to use candlesticks the right way. Okay, so make sure to watch till the end for my bonus tip. So in the last video I showed you how to get comfortable with TradingView and chart analysis so that you're able to go with me in this video series, guys. So today is actually a really important part of this video series. It's all candlesticks, and guys, candlesticks tell a story. So if you're able to understand what the story of a candlestick entails, you're actually able to have better predictions and actually get your probabilities a lot higher when it comes to all your trades. So let's look at this, guys. There's two kinds of candlesticks. There's green candlesticks and there's red candlesticks. As you can see, I chose Ripple today because I actually like Ripple, guys. So I'm gonna show you how it works. So if we look at a candlestick, we're looking at a green candlestick. Green candlesticks start from the bottom, guys, and hold on, let me change the color for you. Let me change the color for you guys so it's a lot easier to look at. So green candlesticks, guys, they go from the bottom and they rise all the way to the top. Okay. So let's just say we're looking at a green candlestick, and it's the 1 minute chart. So before I actually go to the 1 minute chart, I want to explain to you what a 1 minute chart is. So look, guys, this right here. This is the period of time of a candlestick. So right now we have it in the 1 week, which means that each candlestick represents 1 week. Okay, so this is 1 week, this is 1 week, and what that means is that every 7 days the candlestick closes. Now you could change it to a 1 day, you could change it to a 1 month. So if you look at this, I put it 1 month. That means each candlestick is 1 month. Okay, so why? You might be asking yourself, why do you want to have it in different periods? So the farther away you go, which means like if it's 1 month compared to 1 week compared to 1 minute, the farther away you go, the more accurate your resistance and support levels are, your indicators, your technical indicators are going to be. So there's this thing called top-down analysis, which I'm actually going to talk about this in another video. And what this helps you to do is be more accurate in your trades. Okay, so top-down analysis in most basic terms is you go from the 1 month, you start setting all your resistance and support levels, then you go to the 1 week, then you go to the 1 day, and so on, and then you clean your candles a lot more so that they're easy to look at. So anyways, let's just go to the 1 week. Yeah, let's go to the 1 week. So as you can see, guys, we see the greens and the reds. So the greens, guys, they go from the bottom, they start at the bottom, and they go all the way to the top. Okay, that's how they move. That's how these green candles move. Now you might be noticing right here that there's these wicks. These are called wicks, and what these represent is this. So let me just put a wick right here to show you how this works. Okay, it's not in the center, guys. I'm sorry. It's a little hard here. So this represents the wick. So how this works is that this candle started from the bottom, and it started going up in price, right? And then what happened here is that once it got to the top, the bears took control. They took over, and they started putting the price lower. And once the candle closed, it ended up closing right here. Boom. So that's what this wick represents. It represents that in that period of time, the price went all the way up, and then it started going back down. The bears took power of it. Sometimes this actually represents bear traps, which means that the bears are actually getting the price a little higher so that people have buying pressure, and once they get higher up, they start putting a bunch of sell orders and driving the price down. Okay, so this is what could happen here. Now, guys, if you see, I'm going to explain to this later. Hold on. Let's just go to the reds. So now the reds are the total opposite, guys. How the reds work is they actually go from the top to the bottom. Okay, so that's why they're red, because they're representing sell orders. So with the wicks, it's the same thing, guys. Let me just put a wick here so you guys can understand. So with the wicks, guys, this is what it represents. So it started at the top, and it started getting sold, getting sold, getting sold, getting sold, getting sold. And it went all the way to the bottom. And then the bulls took power of this and then started buying, having some more buy orders. And then they drove the price up in this time period. So it leaves this wicks, and this tells you a story. This is what it's telling you. And then once the timeline is over, then the candles close and it leaves that wick like that, like just like this candle right here. That's exactly what happened here. Now, guys, I want to explain to you something. Just because a candle, if you're looking at a live candle and you see it being green, that doesn't mean by the end of the time period it's gonna keep being green. So let me explain that. So let's just say this candle started off by being red. Okay. So it went all the way from the top, started off going to the bottom. But guys, if you have it in a 1 week or in a 1 day, there's so much stuff that could be going on in that time period. So if it starts going down and then it goes all the way down, just the same thing, and then it just leaves this wick, and then it starts going back up, guys, and it actually crosses this line and it goes over, it actually becomes a green. It becomes a green candle by the end of the time period, and it leaves this wick. So I mean, this is what could have happened here, guys. You see in this candle, there's a small wick right here. That's what it could have happened. It started off as a red candle, went right down, and then it went back up, and then it just skyrocketed, right here, and then it just went back down, and then what happened here is the same thing. It just kept going down a little bit, and then it just came back up. So this one right here could have actually started off as being a red candle, because it started going down, but then it stopped. Okay, the bulls took over the position, and then they just started driving it back up. Okay, so that's what these mean. That's what these like two-sided wicks mean. Means that it could have started as a different color. So this one actually definitely started as a red candle. This one definitely started as a red candle. Look at this. It went all the way down to here. And you know what this means, guys? When you see these long wicks, it means that there's a lot of price manipulation. That means that the global elite are driving the price down, making you think that it's a major sell-off, when in reality they're just putting a bunch of sell orders, and not all of them are going to be fulfilled. What they do is they take the sell orders just in time in order to stack up on coins really quick, and then they just buy it back up. Or sometimes they even do it just to liquidate some positions in futures markets. So that's what could happen, So guys, I'm teaching you this the right way. In the beginning of the video, I said that I was going to teach you this the right way, because many people look at candlesticks and they think it's very simple, and it's actually not, guys. And more in these markets, okay? These markets are so manipulated, and people are going into this market using the same strategies they use in Forex, the same strategies they use in stocks. And I just want to teach you the right way, because if most people are doing this in that same way, then most people are losing money, guys. There's a 90-90-90 principle. 90% of traders lose 90% of their money in 90 days. That's what that means. So we don't want to be in that side of the coin. We want to be in the right side of the coin. We want to be using the strategies that the global elite are using, which is looking at these markets differently. Okay? So let me just keep going with this. So guys, in these markets, what really shows how a market is manipulated is the wicks. Okay, so if we see these long wicks in markets, that means the manipulation is going on very, very hard, very strong, and these kind of doesn't play with market psychology. I mean, there's market psychology, and then there's these people that look at wicks and they look at what most people are thinking is going to happen, and then they do the total opposite. So that's why we need to look at these wicks, and we need to look at these market differently than with stocks. So like, for example, in stocks, I would not be looking at the wicks as much. Okay, but in here, these wicks, they weigh heavily on the market. So I want to show you something. If you see, there's different kinds of candlesticks that entail if there's a bull trend going on, or if there's a bear trend, or if there's a reversal. And it's very important for you to know these patterns. But guys, take it as a grain of salt. Don't take it as it's 100%. It's like, this is all market psychology, and there's also a lot of manipulation again. So let's look at dragonfly doji, guys. So a dragonfly doji is actually, it's a red candle, and this is how it looks. Okay, it's a red candle, so it starts from the top to the bottom, and what it does is that it goes all the way down, guys. Goes all the way down, how we've spoken about it before, and then it actually rises. So it starts leaving a wick, okay? And it rises and it leaves like a very, very small red candle with a long wick. Okay? So it leaves a wick just like this one. It leaves a huge wick. Okay? What this means, guys, is that the bulls have taken over. They have taken control. So this is actually a bull sign, guys. It means that there's probably gonna be more green candles ahead. So if you come up with a candle like this in the market, I mean, take it as a grain of salt and look at other indicators and other patterns. But this is a sign that that there's probably gonna be some green. Okay. So now let's look at another one. This one is actually, hold on. And guys, don't get caught up with all the names. Just make sure that you know what's going on. So this one actually shows indecision. And guys, I'm gonna be totally honest with you. I forgot the name of this one, but I mean, like, I've been doing this for so many years that I don't even look at the names. I'm not talking about these names all the time. So this one looks like this, guys. This one looks like this. So what this means, and it could be either a red or a green. This shows indecision in the market. So guys, sometimes the best decision to do is to not be in the market at all, or not make any moves, but be prepared. Okay. So this is what I would do if I saw a candle like this one. I would not do anything. I would just make sure that my strategies for downside and upside are all ready to be made. My decisions are ready to be made. So what this entails is just indecision. We look at candles that are like equally, the wick is equally in both sides. That means that bulls and bears are fighting over the control. Okay, so I mean, this is a longer one. This one could be looked at as like that, but it's a little bit thick. It's a little bit big. So I would not. It's kind of it's overall green. So that would kind of mean that the next candle also would be green. But you see all the indecision that comes over, then the bears ended up taking over. Okay, so let's just keep going to the next one. So guys, there's one called the three white soldiers. Again, guys, just remember the patterns. Don't worry about the names. So the 3 white soldiers is a very bullish sign, guys. How it works is like this. So it's 3 green candles like this ones. So you go like this. Then there's another one like this. Hold on. And then there's a third one. And if you notice, guys, there is no wicks. Okay? This is a very bullish sign. This is a bullish sign. This seems healthy. This is how a healthy market looks like. Okay? And it's very bullish. So if you see this pattern, this means that that there's something good going on. Okay? Now you could go to the one day. I like to use from 3 hours and up. I don't like to use 1 hour. Again, guys, look, guys, there's a myth about day trading. I want to be 100% with you guys, and day trading, guys, is one of the strategies. It's not it's not always what you're going to be using, because you don't dictate what the market's going to give you. You don't dictate your profits. The people that dictate your profits is the market itself and how you use it. So if there's enough volatility for you to actually day trade in like one timeline, then yeah, you could day trade. But the best thing to do is look at what the market's giving you and use it. So sometimes you're going to be swing trading. Sometimes you're going to have mid-sized term holds. Sometimes you're going to have long-term holds. You know, like if you see some long-term profit opportunities, might as well just hold it for 6 months. You know, like that's how good traders do it. That's how the best traders are doing it. They're not looking at this. Now, when it comes to futures and all that, that's a different deal, guys. That's honestly, none of you guys should be playing with that. You guys are gonna get liquidated, guys. If you try and play with futures right now, as you are, you're gonna get absolutely liquidated, and you're gonna lose all your money. So don't do it. So let's keep going with this, guys. Now, just how there's this these pattern right here, there's also the reverse of that. So it's called the 3 black crows. It's the same thing, guys. It's just red, and it's a bearish signal. And guys, I don't want to we're looking at this. We see red and we see green, and psychologically, you're gonna look at the colors and be like, "Oh, bear is bad and green is good," but that's not true. Okay, we could make money in both sides, bear or black or bull. We could definitely make money. So if you see that the market's going downward, then that's a profit opportunity too. There's ways to short this market. Okay, like right now, I told you not to use leverage. Also, you should not be using leverage right now. But as a newbie investor, a newbie trader, what you should be doing is maybe, pulling some profits. If you see that the market is going downward, you pull some profits and then you reinvest it lower. You catch the wave, but never sell your whole position if you think that the overall trend is longer. In this market, overall trending, it's long. We're going long overall. So what you're trying to do is grab 5, 10, maybe 20% of your profits. You pull them. You wait until the prices go down. If you see these candles like this, let me show you how the 3 black crows look like, so that it's clear. So 3 black crows look like this, guys. It's the same thing. Boom. So yeah, guys, you see this, and if you see more technical indicators are telling you that the market's gonna go plummet, you pull some profits, guys. You pull some profits. You wait until it plummets. You buy some more. There's always profit opportunities, and that's what you got to be looking at it. Always being at the right side of the coin, and don't get your emotions into it. That's why emotions in these markets are so important, and that's why emotions as a trader is one of the most important traits that you as a trader can have. So now let's look at another pattern that I like. Okay, so this one's called the hammer. Okay, so it's a green candle. So I'm gonna show you exactly like how it would look live. So this candle would actually start off by being red. Okay, but I'm not gonna click it on red because I gotta be clicking. So it would start off as being red, which means from top down is going all the way down. So just imagine this is red. And then what would happen is it would actually kind of reverse. And it will leave this long wick and just reverse. And just kind of be like a little bit higher. So this is what a hammer would look like. It would be like that with a long wick. And the longer the wick, the better, guys. So that's how long it would look like. That's how it would look. Okay? That's a hammer. It's a green hammer. And it's a bull signal. Now there's also let me show you a bearish signal with a green, because sometimes even though it's a green candle, it doesn't mean it's bull. Okay? So let me show you this one. This one is actually a green. It's the opposite, but this is a bear. This is a bear sign. Now remember, guys, this is just one type of pattern. I do encourage you to look at other patterns so that you're more sure, and what we're trying to do here is have a statistical advantage. Every single trade that you do is not going to be correct. Okay, but what you want to do is that overall in all your trades, when at the end of the day, when you have all your trades, you had 1,000 trades or whatever. If it's only 30 trades, then your trades are overall positive and you're making money. That's what you want to do. So this one is actually a bear sign, guys. This one right here. Why, you might ask? Because, guys, it started off as a green, it went all the way up, and then the bears took it over. Okay, so that's why we see this long wick, because they took it over and there was selling pressure. People pulling profits, whatever it might be. And we have it right here. So long wicks mean bears have taken power, guys. So, and also, I mean, it means so many wicks in these candles. If you go to the other markets like stocks and Forex, you won't see that many wicks, guys. You won't see it like that. Now, I'm not saying there's no market manipulation in those markets. I'm just saying it's more regulated. Therefore, there's less market manipulation. And that changes the way you invest, the way you trade, guys. So, guys, that's all for today. I'm going to show you my bonus tip. So, we've been talking about this whole market manipulation and how traders actually most lose money. And guys, this is the main reason, guys. This whole charting is all made kind of like a casino. Red, green, they're very fluorescent colors so that you act emotionally. They're trying to trigger your emotions. And if you think about it, everything you buy, even if you're buying like clothes, if you're buying things that you don't need, everything is triggered out of emotion. And all these people that design these platforms, they know that. Sorry, guys, that's my alarm. Give me 1 second. So this is all triggered by emotion. So the best traders, what they do is they actually change the color of the candles to just a plain gray. And I actually do this too, but in order for me to show you, and make myself clear, I just change it to red and green. But this is how you do it, guys. You go to properties, you go to candles, you put it in gray, and you put this one in gray too. Very simple. You click OK. Also, you gotta change you gotta go to properties again. Hold on. And you take off this. Okay, and that way, guys, I don't know why these two are showing green, but whatever. That way, guys, emotion's not gonna take over. This is just telling you the story of what's happening, And just because it's a red or green candle doesn't mean that it's telling you more. Okay, it's actually gonna kind of screw with your head a little bit when it comes to green and red. It's good to start off looking at the greens and reds, but once you get used to it and you're actually able to learn and see what's going on, you could actually know which one's red and which one's green without even looking at the color. And that way, you know, the best thing to do is just what I do if sometimes I have a little bit of doubts to see if it's a red or a green. If you see these colors right here, guys, whenever I go over one, it shows me if it's red or if it's green, and that way the emotional psychology doesn't take over. So yeah, guys, I hope this video was helpful. If you like this video, hit the like button below, share with your friends, and be sure to subscribe. Thank you for watching, and I'll see you on the next video.